look at this. Let me just, this is Bond. I don't know if you saw this on Twitter. I did post it on Twitter. Twitter's become a bit of a mess. Look at that. That's the 10-year government yield. All right. Obviously, the government has to borrow money, and that's the yield they pay. It's now higher than the peak after Liz Truss's mini budget, which is a bit of a worry, because of course she's Reeves the what's it of accounts is almost breaking her fiscal rules here. She's got very little headroom left, and so she's gonna have to cut spending or raise taxes. So it's a little bit worrying. Anyway, so we'll see what happens there. Okay, we're going to go back at the start. It's a Wednesday weekly webinar, of course, 8th of January, 2025, Q1. This is live. And if you're watching on the recorded version, I know a couple of people said, oh, I can't make it. That's fine. It's always recorded. I don't know why I'm telling you this, because if you're watching it recorded, you'll know that. But it's on the webinar part of the website. All right. Welcome to new members. Quite a few new members there joining. So welcome. And I will give a quick tour, just to let you know. So I did, you should receive an automated welcome video explaining exactly what the website's about, and giving you a sort of tour around it and all that stuff. But I'll give you a quick. Steve, happy New Year! Yeah, happy New Year. Hi, Barry has joined. Hi, Barry. Thanks for joining. Women, no, listen, it's amazing. I think it's a case of like, why would you ever have, someone running the economy who knows nothing about business? Theoretically, yeah, she's fine. But like I say, you can pass your driving test here theoretically, but can you get in the car and drive? No. Get more business people involved if you want to stimulate the economy. Anyway, by the way, there's quite a few new members joined, like I said. If you're not on Discord, the chat group, by all means, email me, justin@sharepickers.com, and I'll send you a link. It's an exclusive link for Sharepickers Investment Discord group. It does expire normally after, say, 7 days or something, so if you don't log in within 7 days. But, yeah, just email me if you want to join the chat group. Like I said, I'll give you a quick talk, because there's even for current members, there's some new updates happened over the Christmas period. So learning sections here getting started. There's fundamental analysis, technical analysis, portfolio management, spread 10 lessons there. There's the blog here, which I always post. The webinar link on a Wednesday. That'll disappear late tonight because the webinar recorded will be up here. Okay. But then my holdings, I'll update. In fact, I'll show you my holdings in the webinar today, then I'll update it after the webinar. The top 10 fund, these are companies I invest in, which are the top 10 of the MicroCap League, thereabouts. Okay. Now, by the way, if you click on the MicroCap League and you want an explanation as to what it's about, if you click there, okay, it'll take you to a blog post explaining what it's about. Okay. And this is also the same with now. I'm going to change this, my watch list. So it's a bit, because I forget to update it, and sometimes I see a company update, and I won't have time to add it to the watch list if I want to invest in it. So this will be for requests. If there's a company you want to look at on the webinar, and it's not in any of the watch lists, then we can put it in there. And someone's asked to see Cake Box again, so we'll have a look at that quickly today if we can. We did cover it in the end of November, by the way. But even with potential, these are two new watch lists, okay? And now, again, the explanations, if you click here, it'll take you to an explanation of the two new watch lists, okay? But essentially, they are feeder lists for the MicroCap League. MicroCap League is only for profitable companies that are sub 100 million. And the potential and recovery lists are companies, maybe not quite, potential are for growth companies, newish companies that are growing and have profit forecast in the next year or so, okay? And recovery may be companies that have done well, gone through a rough patch, and are maybe recovering. And hopefully they will end up on the MicroCap League once they, their metrics and their score ranks them as such. They need to be on there. I just want to show you something here. In the back end of the MicroCap, the whole website. So there's 71 companies eligible for these lists. Okay, all the data is plugged in there, but only 50 will appear because obviously the top 30 in the MicroCap League, and there's 10 each on these two lists, okay? And I'll keep adding to that list. I may add about 100 companies or whatever. And it's up to the scores whether if they improve on the scores, then they'll appear in here. Okay, so this changes all the time. Every sort of week, on I think someone's who's that Mark? I think you may be on mute there or something, or on mic. Every evening at 6 p.m. all the share prices get updated, and of course, with that is the valuations of the company and also the momentum of the stocks. So these get updated on a daily basis, every evening, and so these change, the rankings change. And you can see here, in fact, it was Ramson's 3 last week, was it? But it's at number 1. Filtronic was 18 last week. It's got up to number 2, and that's largely can be to do with momentum because the share price goes above the 200-day moving average. But you've always got to be aware of the value as well. If the value score is low, you think, okay, is there much return in that if the value score is low? But the most important thing is growth and potential, because this is next year's forecasted growth, okay, and values in that. But I'll go through that in more detail when we look at a couple of examples. All right. So that's a quick tour. There's other bits on there, of course. There's news. Now, if you look at news there, then these are only from companies sub 100 million market cap, so with revenue. So already it filters out other companies who have no revenue or or a billion market cap, whatever. And explain why I only look at microcap companies. If you have not read the book, then it's worth it. I go into more detail there, but I'll explain that. But then there's watch list there, microcap there, blog there, learning there, and so that's mainly it. There's news, tips. That's open to anyone. That one is just I listen. If I send out a tip, okay, when I buy a microcap stock company, members of the club will have a month's warning on that before I publicly announce it elsewhere on social media or send out an emails via this tips list. Okay, so you'll have a month to research it. Do your own research. I get investments wrong, so don't just assume it's a buy. Do your own research, but you'll have a month. Over a month to look at it before I send that out on that list there. So don't worry if you're not on that tips list, because if you join the webinars or you look at the blog, you'll see what I'm holding anyway. Okay. Any questions? Just pop them in the old thing there. Are there any questions? Let's look. Anything? There's one chat there. Yes. Could you make your screen larger? Yes. On the Tony. Yeah. On the. I'll do that now. I'll try and do that now. Let's look if I can do that now. There we go. Hang on. Let me just get rid of these controls. Hide floating controls. So let's see if I can make it larger. Oh, there we are. Is that a little bit better? I mean, that's max. Okay. All right. So that's a quick tour. Tonight's webinar topics are my holdings. Ooh, misses. So I always update this. If I buy a stock, I'll generally send you an email, or if I buy stock on like I have bought one a day actually, but it's not for my holdings. It's for the MicroCap League Fund. I'll alert you on the same day, hopefully, as I buy it. Okay. Unless you do a webinar, which I can just update you here, but I'll put it on the blog after. Look at the top 10 fund. These are companies that invest £1,000 in each. These are top sort of ranking companies. I mean, they don't have to always be in the top 10. They can, go out and up and down. But, that's the minimum requirement. Like I explain, if you look at the blog, I explain, the pickings. And then if they get in the top 10, I'll do further sort of research on them. And if I think they're a decent company, I'll put in there. There's only 10 companies in that. It's still okay. Another just topic for tonight. There's only 2 ways to create your own wealth, and it's a bit of a backstory as to why I created the MicroCap League. But hopefully it'll think. And also a new section here. So we used to kick off companies. We started off the MicroCap League with 150 companies. In fact, we've analysed a lot more than that. But we started off with about 150 odd companies on there, and we got down to like 36 or something like that. And we couldn't really kick any more off because it was a very fine line between companies then. So what I did was end up displaying just top 30. So there are companies, there's another sort of 20 companies below that are not displaying, that don't rank high enough. Okay. So what we'll do now is we'll analyze certain companies on these watch lists, MicroCap League, potential, and recovery every week, just to check them out, because the more you get to know businesses, the more likely you are to make a good investment. And it's about taking your time. So we'll look at 2 or 3 or maybe 4 or 5 companies a week on these watch lists, when they come up with results, and see if they're a potential good investment. And maybe you can throw some ideas forward as well if you know about them, because I just generally look at the figures and then I go a bit deeper if I consider it, of potential in some way. Okay, so let's start. My holdings. That's it. Beaks had a bit of a fall today. In fact, it's not been a nice market. If you look at the, let's have a look at the where is it? I mean, generally the indices today dreadful. So this is trading view, by the way. While I'm looking at the charts, okay. Look at the Nasdaq yesterday was dead, like, but even today, look at that FTSE 250 today. It's down. Why isn't that loading? It's down 2%. And it was down another, I think, 2% yesterday. There we are. Funny loading. If you're not aware of charts, by the way, like I said, on the technical analysis section, I do tell you how to set up charts, but I'm happy to go through a chart session on the webinar, or any bits if you want. Look at that. Breaking down. This is a 200-day moving average. Broke down there and this. So it's quite bearish out there. I mean, a lot of this is to do the thing with bonds, you see, the high yielding bonds, apart from the trouble it gets the government in, is that if there's a decent yield on a bond, then it sucks money out of the markets, because why would you invest in risky assets like equities when you can get 5% on money markets or whatever? So there is a real world, and in fact yesterday, S&P and American indices dropped, and that was largely down to the bonds. Well, S&P did 1% yesterday. I do think the American market's in a bubble territory. There's one I did share on Twitter, actually, and social media platforms yesterday. Howard Marks' Bubble Watch. It's worth looking at that. He did a little podcast and an article, and just some of the things that are happening. And there's quite a few signals that this may be. It's not so much just a bubble. It's just when you have returns like this S&P 500 has done over the last 2 years, it's like 26%, 23%. There's very little returns next few years. So it may have to go flat. It may have to just fall back down. But, you may have another year, a blowout year, but it doesn't carry on. Sooner or later, it's going to roll over, which will not be good for sort of index funds, which is where huge amounts of money have piled into. Anyway, so back to my holdings. So biggest holding is Ramsden's. It's, I like the chart on Ramsden's. It's just broke at a new high there, and a new 52-week high. And you can see here, previous high, pretty much 235, and then going back, it's just as far back as August last year. And we're in the run up to their results. Now, how can you tell that? So if you go in the MicroCap League and you click here, there's explanations here. It's in red. If a company's in red, that means in the next 7 days, they have interim results out or full year results, okay? So I wouldn't go trading or buying a company before that, because you should know companies. I won't, it won't alert you when trading updates happen, because they don't really put them in the diaries. But obviously, trading updates come before half-year results, which are interims, or full-year results, normally a month or so before. And so it's largely known what's going to happen. Now, Ramsden's are going to report record profits, but it's more about the outlook, and how things have been trading. And I think they've been doing quite well because, gold is at an all-time high. There's cost of living crisis, which will help their pawnbroking side. And I think, as far as currency exchange is concerned, I think people safeguard their holidays. We've seen that for a while now, since COVID. People tend to cut back on sort of, white goods and all that stuff, but still spend on holidays. So that should be okay. The only part of the business that was, not flying was luxury, watches and all that stuff, but that's rebounded. And if you look at such watches of Switzerland, they're reporting a rebound. So I'm assuming the outlook should be quite good. And of course, Hercules Site Services is one we knocked out a while back, but I've just picked it again and updated it. And like I say, it scores quite highly. So let the scores do the talking, because it's a fine line between these companies. Anything that's in blue, okay, I've just updated. So this may have been a trading update where there's new broker forecasts come out, and I've updated it, or anything. It normally is trading updates really with broker files, or of course interim results or full year results have been published, and I've updated the figures. All right. So blue is they've just in the last 7 days been updated. Red they are going to be updated in the next 7 days with either interim or full year results. Okay, I hope that makes some sense. Get some any questions here. Thank you. I think the US market will pull back this year with the exception of Mag 7. Tesla may struggle, but other companies will continue strong. But the thing is, it's like, honestly, that Howard Marks thing is worth listening to, because they often say there things roll over when companies seem invincible, like Nvidia. It can't keep beating the growth, even though the margins, the profit is very good there. So it's not the dot-com bubble. Back then, dot-com, most companies, if they had revenue, they definitely weren't profitable. But now they are. There's some fantastic companies in the magazine with very good margins, chucking out lots of cash and growing very quickly for big companies. But sooner or later, they can't keep beating the previous year's growth because they get too big, and they get to the stage where, if you look at the valuations, on the S&P 500, it is, towards the top end. And when that happens, basically the return over the next few years isn't as good. So you may have to have it going sideways or sharp crash and then rebound. Or so it's just, as valuations get higher, you can't get the returns. Anyway, but it's a brilliant. Maybe I'll post it on Discord. I mean, did I do it yesterday? If I haven't, I'll post it on Discord, the sheet, because it's worth listening to and reading. That's the American markets, of course. The UK is the sad thing is we do get dragged down by the US markets, but the valuations over here aren't as high as America, so hopefully it won't get hit as much. But I mean, bubbly or frothy markets can carry on for a long time. It's someone emailed yesterday me saying about the macro. It's always good to keep an eye on the macro, but trying to time individual investments based on macro, it's a hard game because, like I said, you can carry on a bull market can carry on way longer than you think, and a bear market can. So all you can do is focus on individual companies, and if they're still improving and they're good value, there's no reason why you shouldn't continue to hold them. Okay, so that's my holdings there. Like I said, DSW Good Energy is there, but still waiting for the takeover bid there. Kooth down a little bit. North Coda's up. Time Finance. I bought a little bit more. I topped up quite a bit actually on recently on some of these companies, because it's very bearish. And I'm quite bullish. I think, apart from the bonds, I think interest rates are going to have to come down. I think there's so much pressure now on Reeves and Starmer to be pro-business. I don't know if they'll do it, but I'm hoping they will, because they realise they won't admit they've made a cock up with the budget, but secretly, you can see Starmer appealing to regulators how to help growth. It's like, what? Why are you asking regulators? They've asked business people, for heaven's sake. But I think I think out of gloomy times, sometimes you get nice upside. So that's so I try and keep the bigger holdings. I try and leverage towards my winners, and keep my losers small. As is happening here. In fact, I've got quite a decent position in personal group. I'm quite happy with there's like a 6% yield on that, and I was quite happy with that date last time. And 6 companies in profit, 2 in loss. Portfolio weighting of the profitable companies is 66%. And basically, I'm down to 5. That's the lowest I've been for a long time. I was up to like 30-40% in cash a few months back. But I think if you're not going to buy it towards the bottom of the market when everything's gloomy, when are you going to buy? Because that's the sale, isn't it? Top 10 funds. So what I've bought is System 1. Okay, I got tripped out of FinSetter. I'm not sure if that will. I have to stick to the rules. But FinSetter did say there in the last set of results, it did say they had a strong H2 shaping up. So maybe I'm wrong there. But nevertheless, Synetics is the best performer, 38%. What else? Time Finance is second, concurrent. But there's only 2 in loss, which is good going out of 10 stocks, I think. And it's basically just, top 10 of the MicroCap League. I'll show you System 1. They have good growth. The valuation is a little bit questionable, but I did watch their investor meet. So like I say, if you click on a company, you get the information here. And by the way, An asterisk. It is explained at the bottom, by the way, this text here, okay? But an asterisk means an executive director holds a significant amount of skin in the game, more than 3% of stock, right? Normally it's a very good sign, if they have skin in the game, because or because it can it denotes basically they're in line with other investors, and they really care about the business, and especially the founder, owners of the company. In that book, was it 100 to 1 Baggers? You found there's only two kind of traits that companies had that achieved 100 bags. And that was they started off small, and quite a few of them were founder, owner, operator companies. So it's always good to have, executive directors with skin in the game. So you got, where is it? System one, where was it? There we are. So they do pay a dividend. D is dividend, and the asterisk means skin in the game. Okay. So marketing research consultancy, and I was watching this investor meet, and they were saying, no one has what we have. There's a system of measuring sentiment as well about marketing. So I quite like that. Now the growth is very good here. Like I said, if you look at it, market cap 78, enterprise value 69, so they have more cash than debt. They are making a profit, of course. They've got a decent amount of cash, 9.6 million. It's only a small dividend. The growth is very good. These are results. These are full year results on the side here. Like I said, these are interim results. So the last set of results were these half year, 38% top line, operating profit growth, 169%. Operating cash flow was flat, but everything else, free cash flow was very good. So they scored out of a possible 30, they scored 20 there. Now value is questionable a little bit. So PE is 22. It's down from 39 on like for like. But if you're looking at these boxes, you want to see which is the most important, okay? And it's growth pretty much, I'd say momentum and potential. Value is also very important, but you tend to find companies some people just ignore value sometimes, and you shouldn't. But the good thing is with potential, it's about next year's results, and potential does, factor in the valuation going forward. So next year it's 26 times. It's not cheap, but it's still good growth. So growth sometimes, if you're looking, we are looking at small cap companies, micro cap companies that should be growth companies. So that's the most important thing. There's no point. I often question people who will say they're value investors on small and micro caps, and thinking, okay, it's important to have value, but they should be a growth company. And if they don't have growth, they can keep getting cheaper because the share price can keep going down because they're not growing. So growth should be, the priority first and foremost. If a company that don't have, and I said that's what the micro company is all about. It's growth. Then you pair it up with value. But it's got to have growth first. And if you scroll down on any company, you see the forecasts. These are broker forecasts, okay, as far as I can get them up. And if there is a broker note, then click here on target price, and you'll see it load there, okay? There we go, hang on, it's loading. We've just moved house, right? I mean, now it's a lovely house. This is the office in the garden. But the internet's very slow here. It's very annoying. I have two kids, and we've got more devices going online. So you can see there the broker forecast, right? If you click on target. So there's a lot of hidden bits in the website you need to learn about. But hopefully you get used to it. There's obviously a description company here. And if you click here, by the way, on the logo of the company, it'll take you to the website, okay? So you can read out what the company's about. So that's why I bought that. They've had a bit of a sell-off, and so I was happy. They haven't quite got momentum here, but they've had an excellent rally from here up to here, and now they're flatlining. So I'm believing, hopefully, this is a bit of support here. There was an announcement there of a significant holder coming in at 3%, I think. Who was it? Holdings today. There's an institutional investor came on board today, I think it was. Holdings, yeah, we are. Let me pump this up. There we are. Ooh. Who is it? Crucible Clarity Fund. It's Isle of Man, and they've taken 3.2% of the company, which was on the 6th. So that's encouraging. So I'm happy that they're sort of flattening out a bit now. There's very little volume here, so be careful. But I mean, I've only got £1,000 anyway, so it's not a lot. Okay, but like I said, the most important thing is that they've got growth, and second most important thing is, will growth continue? That's what you want to know, because share prices are more about what's going to happen than what has happened. Like, there's no point having companies that had a blowout year last year, but going to have a crap year next year, because as soon as the figures come out, the share price will drop. So you want that sustainability of knowing a company is going to be performing next year as well. So potential is also the highest scoring. Growth here, current growth, and potential, which is future growth. Those are two of the highest scoring, uh, you know, sections on the microcap league. Okay, so growth and potential. 25 for current growth, up to 30 for potential growth, and that includes a bit of value as well. Hope that makes sense. Right. Some chat here. Microsoft will go gangbusters this year as they raised their Azure pricing yesterday. Did they? How much is Azure? How much did they raise it by? It'd be interesting. And they just chucked an $80 bill at AI. Yeah, 80 billion in AI. The language from Trump of the stuff, the rest of the world order is all about USA and the Gulf of Trump. If only the UK and Europe could show some balls and stop some of our better companies being taken out cheaply by the States. It seems to go at the moment. Yeah. I don't know. I said in the podcast there, I don't know if it's off the cuff what Trump said yesterday, but he had this investor come in, throwing a 20 billion at AI or data centers in the US. And he basically said anyone who invests more than a billion in the US will basically expedite regulations, environmental. He said, I know it's like to try and get things done. Aren't they? That's exactly what should be happening in this country. Really, it's about regulation. I mean, I've listened to several interviews with big companies who, in data centers and warehousing and all that stuff. And they said the problem with not just the UK, but it's, Europe generally, is that regulation. And in fact, in America it's happening as well. But, now they've got a government coming in trying to cut that regulation. They say USA innovates, China duplicates, and Europe regulates, which is not good, is it? Mark, we should have the company reporting, say, 5 weeks before the reporting date in amber, because we know the company is doing well and the price should rise the closer we get reporting day. Then change the color to red when there's only 1 week to go. Some people may be missing report dates. Yeah, that's a good idea. I'll think about that. Yeah, I'll think about it, actually. That maybe is a good thing. I think the US will have another stonking year because AI is really just starting. Yeah, yeah. It could have another good year, absolutely. This is Alan. Mega profits will be made by these companies. The UK is going nowhere under the current government. It's a real risk of flatlining for several years. Yeah. Where are your podcast links? Oh yeah. So if you just go, I'll send you the link out. But I'll put it in the link in the bottom of the email tomorrow when I send out the thing. But yeah, I just do a daily podcast now, micro on Discord, by the way. So if you go on Discord, I post the notes every day. So I look at companies and I also post summaries of the broker notes along with that. So on Discord every day, I post a link to the podcast, and if you click on the PDF, it's basically the script I use with all the financial summaries of the broker notes on companies. So there we are. But I'll send you that. Okay. All right. Okay, back to the PDF there. So that's that. So if you look at, I've compared Microcap League with every other sort of, these are the AIM share, FTSE small cap. Onward Opportunities is the only, this is a fund. It's shot, I was beating that up until Winwood, which they held a holding in, got sold and taken out for a premium, and their share price shot up. But I was beating that. So I'm beating every other, the Microcap League, what I'm doing. It's beating the AIM share by 12%, 12%. It's beating the FTSE small cap by 11. It's just behind Onward Opportunities by 2.33. It's beating Premier Miton, which is a microcap fund holder or small cap fund. It's beating Rockwood Strategic by 9.7%. And Miton, in fact, that'll be taken off soon. That's been wound down, I think. But it's beating that. So up until, I think, 2 weeks ago, I was beating that. But I'm confident I will still beat that because I had a bit of a blip from that Onward takeout. So it's going well, the MicroCap League. And I think if you base your investments, on companies' good metrics, then, and these are talking about growth and value and future growth and value, there's no reason why you shouldn't do well, and outperform. Because the AIM all share is full of duds anyway, I think, but in fact, the lower end is. So £1,000 invested, £1,000 profit, pretty much. Okay, sorry, there's one more chat before I get into the main subject area. We're halfway through, this is good. Oh, yeah. Mick, thanks, Mick. He's given you a link there. Lovely. Okay. Now, I'm doing this because I want to give you a background, okay? If you're new, because a lot of members signed up, or a lot of new members will be watching this, and I do say this several times, apart from winning the lottery or inheriting a lot of money in some way, there's only two realistic ways to create your own wealth. I'm not talking about, I mean, yeah, apart from those really odd ways, or winning Omaze. Omaze is good, isn't it? Some of the houses on there are fantastic, but, but in actually doing it for yourself, So own a successful business. And successful businesses are rare, okay? There's plenty of decent businesses out there will generate money, for their owners and all that stuff. But to scale it and be a significant standout performer, they're rare. And that's why, you're never going to have, well, I think the old classic saying is, why should I invest in my 21st best idea? Because essentially, you're never going to have, you shouldn't, if you're holding 100 stocks, it's a nonsense. You're better off holding a fund and having it 10 best ideas or 5 best ideas and investing in those alongside. Because, the more you add, the more chances that you're adding average companies or below average companies, So own a successful business is one way to create your own wealth. Or own a share of a successful business. So you can imagine, if you are an entrepreneur, you've got one shot. And a lot of companies go bust, and then they become commercial, or some go commercial and they do okay, some a bit better than average, some below average, some then, shoot the lights out and exceptional. So it's very hard to create a very successful business. But you don't need to do that. All you need to do is find these successful businesses and invest in them. That's all you need to do. So my aim in creating the MicroCap League was to find successful businesses. It is not, and some people, send me emails sometimes about certain stocks, this and that. It is not looking for a short-term trading. I can see plenty of companies that get oversold. I think that's cheap now, and it's just going to bounce because it's cheap and it's almost valued at cash. But that doesn't mean it'll rise and carry on rising for the next 2-3 years. It may rise for a month or 2 months or whatever. But I'm not into that. I don't have to keep jumping into stocks and then jumping back out, hoping for a bounce, So I'm not looking for short-term trading opportunities or take part in punts. I often see it's worth a punt. I don't want to do punts. If I do a punt, I'll go somewhere else and do a punt. It's like, because the company, has been oversold. So it's oversold, it's going to rally. The news coming out, it's going to rally. There's something technical going on with the SP, it should bounce. Or look at the trades on the book using level 3. It's stacked. I don't care. Punts are betting on against odd outcomes, You may as well bet on a horse and have a bit of fun, and that's a punt. And would you chuck a meaningful amount of money into a betting on a horse? You wouldn't. So I think that's the trouble with the stock market. People say punts is too liquid sometimes. I need to be confident enough in a business to commit a decent level of money to it. And I can't do this with punts. And therefore, they will not provide me with a meaningful return, because I'm not going to put anything more than 1% of my portfolio into a punt. So what's the point doing it? Even if it pays off, unless it pays off massively, I'm not going to make a meaningful amount out of it. I want to find businesses that are improving and are likely to continue to improve. The companies that can return you multiples of your initial investment, but not in the short term, over 3 to 5 years. Companies, I'm happy to be an investor in the business, That's what I want to find. Companies that show the traits of a sustainably improving business. It's a word here, I keep using the word business. And it's taken me a while. When I first started investing, it was all about the share price, And trading is all about the share price. Investing's not. Investing is in the business. forget about the stock market for a second, okay? And you're an investor. If you're offered the chance to invest in a non-listed business, there'll be no share price. So what would you want to know? If a mate of yours says, would you invest in my business? What would you ask yourself? What would you say? What would you ask him? You've got a bit of spare cash. Let's say you've just been, you've retired or something. You've got a ton of cash there. Thinking, God, life's boring. I wouldn't mind investing in a business. Now, that's an exciting part, isn't it? You're part of a business. You're going to be part of a business, but you want to know certain things about the business, And for me, it would be first and foremost, does the business possess a healthy balance sheet? Because if you're bankrupt, I don't want to know. And if you're relying on my funds to keep you afloat, no, thank you. I want to know if you're improving, basically, and if this money is going to go towards improving your company even more, improve the growth. So how do you measure this improvement? And if it's a pre-revenue company, it's quite hard, but they are pre-commercial as well. Companies that have no revenue and no profits, they are pre-commercial. That means they're higher risk, possibly higher reward if they do well, but the chance of them doing well are slimmer. So it's up to you. By the way, the two new lists are a bit riskier, like I said, because they're not profitable, they're recovery. So be careful when you're looking at those. So you may want to take a small position if you really like your company, but be careful, they're not yet commercial. I mean, they are commercial as in they're selling products, revenue, but they're maybe not generating profits yet. So be careful. So MicroCap League, there's a safer list, more sustainable rises likely from that. But you may get some massive upside in the other two lists, if you get it right. So it's growth, essentially. And I talk about this in the book, it validates the company, specifically in revenue and profits. If a company can achieve double-digit revenue growth and maintain margins, meaning profit grows in line with revenue growth, they are a good business. This is above average. So they're growing top line, and they're, after all the costs taken out, their profit is also growing. Say revenue is growing at 20%, profits are growing at 20% as well. That's a very good business. Right? If a company's revenue growth is double digits and its profit growth exceeds this, they are a great business. And I talk about this in the book, great, good, great, and exceptional. And they have to go beyond that to be exceptional. Like they have to be, they have to have a unique selling product that's, validated by contracts or with bigger companies globally. But great businesses, if you can find those, even good businesses get a good return, but great businesses, if you can find those. And in fact, an example of that, which had a sell-off today, was Time Finance. If you look at the set of results, their margins are improving as they're getting bigger. And that will continue to happen because they have unearned income loading off their book. That's the sign of a great business there. So margin expansion along with revenue growth means they can scale efficiently and can therefore go from micro cap to small cap, maybe even to mid cap. And by the way, the size of these in my head, micro cap is about 100 million market cap. Small cap is between 100 and 500. And then mid cap to me is 500 million to a billion. Okay. But they have to be able to scale efficiently, otherwise they get nowhere near that. I mean, even to get small cap is a phenomenal return from micro cap. To get there is very rare. But they can't do that unless they can grow revenue and margin expansion. They get more efficient the faster they grow, basically. So revenue growth and margin expansion is the ingredients of a lot of outstanding performers they possess. And the type of business I talk about in the book that achieved over 1,000% return had that. They had sort of revenue growth and their margins getting bigger as they're getting bigger, So look for that. And there's very few of them around. You don't see a lot of them. So you're often better, putting a bit more money into these type of companies because they're great businesses. Like I say, you're part of a business. Some of us are proud to be part of that business because it's doing so well. You're better off looking for those type of companies rather than looking for other ideas that may be, substandard, sub-quality of that, because you're going to get a better return off those companies. It's the traits of these companies that I use to create the MicroCap League. So that's a bit of background to it, okay? And it's, aside from that, it's discipline of not chasing punts, because that's the hardest thing of all. The discipline behind all this is the hardest thing of all. You can have any rules you want to, but if you don't stick to them, it's the downfall. So the trades are size, like I said in the book, all these companies that literally went on to do these 1,000% started with a market cap below 100 million. So that means straight away, you're not looking around all areas of the market from, 4 billion market cap companies, 100 billion, or, you are focusing and specializing in a certain area and you get to know businesses in this sector. So you're specializing like anything in life. Specialists get paid more than generalists. Like a brain surgeon gets paid more than a GP. A 100-meter sprinter can run faster than a decathlete. So you're specializing and not wasting too much time, and that's why this website is set up towards microcaps. It's so you can specialize in this area, get to know these businesses very well, and even the news feed is sub 100 million. So, and they had growth, they had decent value, they were healthy, they were efficient, they had momentum, and they had potential going forward. So that's why everything is scored on those metrics. All right. Does that make sense? Hope it does in some way. So if you have any, listen, if you have any questions, it's easier rather than email me. You can email me, but join Discord, and then if you have questions, I can answer it. Other people may have the same questions, and they get answered as well. Okay. So there we are. Okay. So let's look at. I'm going to stop share there. Hang on. Share. Okay. Watch list analysis. So let's just go up here and have a look at what's in here. So we'll do three different. Now listen. You may have seen Trufin was on, and Couth were on two different watch lists. And I thought, hang on, what am I doing here? That's wrong. Officially, to be on the watch list here on the microcap league, they have to be profitable for a full year. Okay, so they may have profit interims, like Interim and Couth were both on this list, and they're on something else. And they're, hang on, they haven't had profitability for a year yet. They've had interim profitability, and they're forecast to be profitable, but they haven't actually reported an annual report that says they're profitable for the year. Trufin looks like it's going to be. Well, they are going to be. But I want to see the annual report out. And in fact, by the time that report comes out, they may have come back a bit, and the value may get better. And Couth is the same. So let's look at these companies here. So, like I said, in the blue, we've got Intercede and Likewise. I just updated Likewise. So Intercede first in alphabetical order. I do like this business. The only question I have, I don't know if any of you are holders of this. It seems a cracking business. In fact, they came up with an RNS today, and they rose quite nicely. Nope. IGP is ticker. I do believe it's a high quality business. High quality business don't come cheap, but I want it a bit cheaper than this. And also, I'm a bit worried about going forward. So, so I say it's getting to know these businesses. If they're good businesses, if it's decent quality, if they have an excellent product, it'll sustain for a long time. So don't worry too much about rallying strongly this year because it may be different thing. And in fact, I see opportunity here. But they updated here saying contract orders here worth $5 million in aggregate. So they are a cybersecurity software company specializing in digital identities. Now, it's a very hot area when you think about AI and all this stuff. There's so many breaches now of security and AI, isn't there? Where people trying to take you over, identities taken over, all this stuff, and even so. And they seem to have some contracts with some decent customers, but they have the Intercede suite of products allows customers to choose the level of security that best fits their needs, from secure registration and ID verification to password security management, one-time passwords, all that stuff. Yeah, they've got big customers here. So a decent, you see, today they did rally. IGP. And they've had a cracking year. Now, remember, when a company is highly valued, unless they win some massive more contracts, and the return, and in fact, you can see from the day's results, it shot up in the first of the day, and then if you click on that, you see. So this was the previous high, and in fact, the most recent high I was going to look at how much it's gone up by in the last year. So start of 2024. Pretty much. Wait. Yeah. Even, well, to the high there, it did. That's the wrong way around. Hang on. 2024, 127%. And now it's, like you say, what we got here, as opposed to this, which is a series of higher highs. You've got higher highs, higher lows. This means people are buying at a higher price. And even when it dips, people start buying again. And now you've got the opposite happening. Now you've got pretty much a series of lower highs. Okay, so this is the trend has broken down a little bit. And so we're sort of in a consolidation period where it's going to end. It's bounced off this 200-day moving average. You've got a bit of support here, maybe at 160 there. So it's a good company. I like it. This is my only concern. Like I said, if you look at the share price, they are now 114 million market cap, 97 million enterprise value, which means they have more cash than debt, which is nice. How much cash they got? Plenty of cash, 17 million. These, by the way, this information board is based on their last set of full year results, okay? Not their half year results. If you want to see the cash they have on the half year, scroll all the way down. So it's gone down a little bit, 16 from 17 in the previous year. It's gone down a little bit. But this is a company I think, ideal for watching. Let's be honest, if you're in a huge rise, don't fall for that because, when a company doubles, it gets harder to double again. But the growth is good, even half year, top line is decent. But the thing to look at, will this growth continue? That's what you want to know. They had an upgrade today. The brokers upgraded some of their figures. And I always look for upgrades because upgrading cycles, in fact, Trufin have at 3, and so that's gone gangbusters, which we'll look at in a bit. Upgrade, but you want to look at the potential here. And you think, hang on a sec, what's going on here? So forecast revenue is expected to dip by 15%. Profit before tax growth is supposed to dip by 30%. Not as bad as it was, I think last week before this upgrade, or it was like a lot more than that. But nevertheless, you're going to ask yourself, on a PE next year of 40, with no growth top line and no growth in profit tax, will that rise? I don't know how many private investors are in this that know about these figures, but then it's supposed to go back to growth then in 2026, 6%. So it's not stellar growth. I think they've got recurring revenue, which is decent. But for me, what would you do now? If you like this business, what would you do? I mean, it's on a rally today, good renewals there. These are the upgraded figures. If you spot any mistakes, by the way, if the margins, sometimes I type in the figure, there's a little glitch on the back end here. I type in a number sometimes and miss off the last digit. And so if the margins are way out on 1 year on any of these forecasts, please let me know, Justin at sharepickers.com, because sometimes I miss a digit. I think there's a glitch, but I can't show the developer because I correct it. And then I try and tell him about it. And he says, well, I can't see it until it, anyway. So yeah, but again, and if you look down here, we're looking at 39 PE, 44. It's not cheap. What's your thoughts on Intercede? I mean, I think it's a good business. What's your thoughts? Anyone? Intercede? Yeah. Doesn't Intercede come under the general IT software company where the valuation metrics don't really mean it? Yeah, well, they're talking about, they talk about, I'm to be honest, I can only put a generic, anything above 30 gets a red on the PE, I think it was 25 from that. But they say, don't worry about, PEs on these kind of companies. Look at sales and a multiple of 3, 5. I'm thinking, really? I mean, even on a sales multiple, you're talking, what is it? Sales multiple is price of sales here is 6 and 7. Let me just show you there. Like I said, different value. So a valuation metric, 6.7 times sales. That's not cheap. I like to look at companies that are 1 time sales with decent double-digit margin. I think that's a bargain. But that is like So anyway, what's your thoughts on this? They can scale. They can scale it. Well, the good thing about this is always the thing to look at is gross margins. Look at the gross margins here, 96%. That shows scalability. Cost of sales very low. They can replicate very easily. So pay attention. Like the scores, top scores on efficiency. Now, the reason why health and efficiency score low is because they're not necessarily metrics that propel a share price up, but they can hold a share price back. Like if you've got low margins, your health is not very good. People won't invest. So, but the growth is the thing that gets you going. But yeah, the margins are very good. Like I said, very good margins. Return on capital is decent. Efficiency is good. So that shows it's scalable. And that's probably why the value is so high, because it can scale. But then at this valuation, so there's different parts of the puzzle, isn't there? You have to put together. And I'm thinking, right, can I get this company like this cheaper anywhere else? That's my thoughts. Or just watch this one, So yeah, so I like it, but unless it has a pullback, and I believe if a pullback happens, it'll probably happen when they report their figures, and they come in line with expectations, which is what this is now, and they're still 15% down, even though they've been upgraded. So they've been upgraded, and that's going to come in below this. So I think if there's an opportunity, it'll probably be when the results come out. And I think, what? To be honest, they had a bumper year in 2024, which is, like I said, if they'd not had this year or just grown by like 10% or 20%, then this year would have been fine because they went from 12 million to 19 million because they had a big contract, and that's dropped out. So they're a victim of their own success, really. But I don't know if people see through that. But I like the company. It's it's just it's a good company. But I wish I'd got in earlier. That's all. I'm not in at all. But it's often good to see. In fact, going back to this is where, in fact, if you go back there, this is where now these kind of companies, if it's not in the microcap league, will hopefully appear. If they grow in top line, the growth, it will appear in potential. So this kind of company, before it starts to take off, would appear here, hopefully. All right. Yes, so that's a decent company, but yeah. What else is there? Likewise, the puddings. They had an update there, and surprisingly, it was quite upbeat. And likewise, we knocked them off a while back. But I thought, let's update the figures and just tick the box. If they make the top 30, they make the top 30. So and in fact, a couple of retailers or consumer stocks today, consumer retailers. I think what else is there? There's I did it on the podcast. A couple of them surprised me that they weren't as bearish as I thought. Likewise, there's one. Let me just think. My list here. There's another one. No. Infinity. Oh, Cambridge, absolutely. Cordell is worth looking at. That's on the thing. Where is it? ProCook had a decent update. Victoria's okay, but they're in a bit of trouble, debt. There's something else. Topps Tiles. I'm going to put that data in for recovery on that. Because Topps Tiles, surprisingly, quite upbeat, I thought. And Hornby wasn't too bad, considering the basket case and Victoria. But so I'm going to put those in the recovery and put the figures in. If they get in the top 10, they may do and may not. But I'll put them in. Okay. Yeah, so likewise, what do they come out with today? So just to say what they are, like something in already. I'm thinking. I mean, it's obviously a strong quarter, for these companies, the last quarter. But I mean, they're never going to blow it out of the water. But total group revenue increased by 7.5. Says in likewise flooring, 15%. Current market expectations, profit before tax, and so thinking, oh, okay, that's interesting. Because let's look at the chart. I don't know if they've rallied recently. No, look, I mean, they are. In fact, look at that line there. High, right? Lower high, lower high. And you expect then it to hit this and go below it. It didn't. So now it's broken up with 200-day moving average, 50-day moving average. Then, okay, what we need to see now, it's come back, but it's above this previous high. So this may be a bottom because you're seeing here higher low. Okay, so you normally get the a higher low first. So this is a low, bounces up. This is a higher low here, and a higher high. Even the close is above that previous high. So that's looking quite bullish. And that's why it's got marks for momentum, because you've got the share price above the 50-day, above the 200-day. And all you need to see now is the blue one, 50-day cross 200-day, which is called the golden cross, and you get top marks for momentum. Okay. Now that's, if you look at any of the previous chart, it has to happen before it starts to rally. So likewise, let's look at likewise. It's ranked 25. I'm just at it today. What's the 19? Where am I? Share price is 19.8. So they are enterprise value 73. So market cap is 48. Oh, they got a bit of debt. Oh, they did have it last time. So debt is 30 million. Oh, this is why we didn't like them. Maybe have got dividend yield, but they do have, like I said, Tony Brewer, CEO, holds 11.44%. Now they are into a distributor of floor coverings and matting. Now there's the opportunity to consolidate the domestic and commercial floor covering markets. So they had an update their figures. The last set of results, of course, was half year, and this was a trading update for the full year. So if you scroll down, this is what they're expecting: 150 million in revenue. That's growth of 8%. That floor coverings. We're on a cost of living crisis, and it's driven by the housing market, which is showing signs of slowing down at the moment, and interest rates going up. In fact, that won't help them. Interest rates going up, I assume. But the forecasts are for this, and they said they're comfortable getting 172 million next couple of years. Gross margins again, it's quite a capital intensive business, 30%, and we have got really thin margins here on the net front, but nevertheless, it's profitable. And if they can continue growing, so they're forecasting 8% next year. Profit for tax growth of 430%. So going from 188 to 1 million. And nevertheless, it's still on a high PE, but EV/EBITDAs are bad, and price of sales aren't bad. I'm just thinking, it's profitable. That's why it's in the MicroCap League. It's not recovery because, well, it's improved from there. I think it didn't only listed. So many companies listed at the end of the bull market when money was free and stocks are going to the ceiling, and then they come all the way back down. So it could be a good recovery play, and it's profitable. It pays a little dividend. It's got a major investor who's the CEO, 11%. So he's got a lot of skin in the game there. Anyone likey? Anyone likey likewise? This is my thoughts. So what you need to do on charts, if you forget about things like this, is I often put alerts on moving averages, and I do this on my computer, right-clicking. It's control right click or control click, add alert, and I've got this like price crossing, what value, and go to the 200-day moving average, and I go like, no, like, you don't have to put anything in this box, 200-day, once per bar. So anytime it crosses down the price of the 200-day, I'll get an alert, and I can do it on the 50-day as well. Crossing, 50-day. Oh, it's done that already. Like times 50. So for any pullback, so once per bar, whenever it does it once. But I also say here, it hit here, okay, and it came down to this price. So it shot up this in the morning. A high of 20.8 pence. So you can say there, and I put an alert there on the high, because it can go sideways for a while. So high, like high, and I get alerted on text on my watch and everything else to let me know when it sort of breaks that level next time. And in fact, you can see there, it's above that level. But because it may have to go sideways for a while because it shot up the last few days. The relative strength is quite high. So we'll see. We'll see. That's like. Um, okay. Sorry. Any thoughts on likey? Chat. Sorry. IGP. If you strip out 2024 exceptional performance, yeah. PCADS says if you strip out full year 2024 exceptional performance, revenue's grown 30% from financial year 23-26 and adjusted profit for tax 40. Yeah, it's good. Yeah. Full year 24 had one big off contract with US federal agencies. Yeah. Forward, yes. So Alan says forward growth for IGP. I mean, is only 16.1 in 25, so declining. And yeah, that's not a lot of growth stock at the revenue line. Yeah, I'm a little bit worried that they're saying that this is the kind of company. I mean, if it pulls back, even if it pulls back to because they have high recurring revenue and very high gross margins, even if it pulls back to a relatively high PE, but low for this stock, they're the kind of company, like say, you can have those one-off big contracts, and it can surprise the upside. But I wouldn't buy at this level. I'd be a bit wary there. Mike said, I like them, and they will be taken out at some point. Yes. Because it's worth watching to see if they have further wins before year end. 31st March, as hinted in today's broker note. Oh, okay. Daniel, next. I've been burnt, but likewise in the past, says Mick. One of my mates works for them. Convinced me to buy some shares. They tanked shortly after. I actually thought I was getting insider info and was eyeing up a yacht. I ended up buying a red small boat. Yes, but the thing is, they probably come to the market. Was that when they first come to the market? Of course, all the companies are very excited when they come to the market. So, yeah. Was there any more chat there? Sorry, did I see any more? Yeah. They're in the same game as Victoria, who are desperate for sales to fund massive debt. Not sure about likewise. You're right, Graham. Yeah. Rob, looking good. Yeah. Steve, like it. I can't get excited, Alan said, by floor coverings and 30 million debt, so hefty, not for me. Yeah. Michael says thumbs up. Okay. In fact, I was shocked today on time-wise, but let's have a couple more. Let's, what else? Let's quickly look at potential Trufin. Now, I do like Trufin. I missed out on this. I saw, I mean, to a certain extent, it's annoying because, like I said, I like Trufin for a while. Then Chicago cancelled, which Lloyd's cancelled Chicago, sorry, one of their subsidiaries, and it dropped down here. And when you think of it, even if I look at the chart, if I liked them, I could have bought back in. I didn't do that. I think there'll be more opportunity. I think, like I said, I think if they're sustainable. The thing is, Balatro, one of the games of PlayStack, is a phenomenal success. And in fact, Mortal Shell has been. They're going to have a sequel to that soon. And you can't predict that kind of success. If you look at, I don't know what the hit rate is of games, but I assume it's like films. It's very hit and miss. You never know if you have a standout success. But if you look at they are profitable ahead of expectations. So Trufin, gutted us and missed out on this, but we click on here. They are now an 87 million market cap. So they were loss-making last year. Half year results. Yeah. So half year results. So I mean, it's hard to say on a P. On a sales basis, it's not too bad. EV revenue. But when is Mortal Shell coming back out? Because their forecast to drop. I don't know what's happening in 2025. To drop a little bit. So we know this is in now. They've said about this. 54 million, which is, massive growth here from 18. 197% growth from 2023. This is all priced in. And they are going to head to profitability here. Okay, that's 500,000 from a 7 million loss. Amazing turnaround. But then you've got to be looking forward to 2025 now. So, okay, it's going to... So I'm interested. I'm sitting on the sidelines. I wouldn't be buying at this level personally, but I do look like what they're doing, and all parts of the business are improving. So it's one of those companies I will keep watching, and this will now be promoted from the potential to the MicroCap League. as soon as they report those profitable figures for the year. I do like it, but I think, they've risen a lot. It's last year, phenomenal rise from that sell-off. But like I said, this is unlimited upside to a hit game, isn't there? Because, you keep selling it. But you never predict that kind of game. 98% up this year, pretty much. Yeah. But there, I personally will be buying now. Anyone holding Trufin here? I do like it. I missed out completely on the rise here. I should have just bought back in on the break of the 50-day moving average and breaking new highs, which is pretty much 54 pence. Breaking average here, broke a new high at 55, and then up 2-day up. But there we are. I didn't see it going that high, to be honest. Thoughts on Trufin? Anyone? Anyone still holding? Anyone doing well? Likewise, a lot of debt, also increasing employees across 3 new depots, as Tony. Trufin took at length that the majority of the games are profitable. They will struggle on Balatro, like for likes. Absolutely, Graham. That might be the better time to buy in. Yeah, I believe, again, both of them, Trufin and IGP, they are companies you put on the watch list. And like I say, you put alerts on them, on the chart, and you wait and see what happens, then just reevaluate. For now, I've missed out on that. I'm not going to go chasing it. Like I said, when a company's highly valued, there's the potential for less return or even negative return. All right, so that's why you need to get some decent evaluation there. What else was there? Something else. I'm running over a little bit. So I want to cover something. It's very an odd one, Software Circle. They've raised so much money. They basically just buy. It's in the potential list. They basically just buy software businesses from fund founders and try and scale them up. But they raised a chunk load of money recently. In fact, when's the last set of results there? So the only top line growth of 8%, but operating profit growth was, in fact, they're not quite profitable yet. Let's look at their figures. They are. They went from a loss there, but it's quite lumpy. They got up and down. But they're interesting because they don't have any broken notes. But I think some of them they literally their own. I think if one of these do well, one of these companies, it's one of these things. Our businesses, they have these businesses here. I think is it Link Makers, the big one, or Arc? They have all these software companies. And you're thinking it's a play on it's a software play essentially, And if one of these takes off or gets taken out, could do very well. But again, they're not cheap. And I can't see why they're so expensive. They are like 84 million market cap, and they've got sales of 16. Again, these software businesses tend to be recurring revenue, So it's an interesting business. But, like I said, it's not cheap. SFT. And in fact, they've had a cracking run. Look at that. They haven't the 200-day moving average bouncing off it. But now, it's almost they have to go sideways. Is this breaking down the trend? So this is when it becomes interesting. Like I said, I have put alerts on these crossing these 200-day moving averages to see what it is. Because previously when they've done that, they've carried on back uphill. So it's interesting to see because they don't have any forecasts. And I put forecasts in there based on what I thought, going for 15% top line and replicating improving the margin a little bit, replicating some of the margins there, upgrading them. So these are pretty much guesses. You have to wait for the figures to come out. But I think it's just an interesting company because software, and they own 7 of them. So if one of them can do well, who knows? Does anyone know about Software Circle? Yeah. George, good value, low SP, could easily double. Yeah. So, you're saying likewise, yeah? Yeah, so Software maybe worth looking at. Is there any other quick looking at? NORAC, we've looked at before. Kate Box quickly. Do you know what? I'll look at that next week because we've run over time here, and I'll try and keep this an hour if I can. And like I said, we did cover that in late November. So if you just go to the website here and go on webinar, and then there we are, C-Box. Oh no, mid-November, 11th, 13th, 11th. So it's there, okay, on that webinar there. But I will cover it next week. Like I say, if you have any requests, around 100 million, you think they have growth there, maybe decent bit of value, let me know. and we'll put up as a request. But I'll do Kickbox next week, so I'll make sure I update the forecast as well for that. Okay, thank you very much for joining in, everyone. And like I said, I will update the blog on my holdings. If I make a new buy, I'll send you an email. I won't do one on Systems One because, of course, I've talked about it on the webinar, but I'll put it on the update the blog there and all that stuff. And I always update the blog on the weekend. Okay, so I won't send an email, but I'll update the blog. So check the blog for my holdings. If I do buy something new or sell something, I will send you an email, but I won't send you too many emails. Okay, so I hope that makes sense. So if you're not on Discord and you want to be, please join in by all means. Graham, good catch up. I'm always missing the Wendays. Thank you very much, Graham. Mick, thanks, Jay. Lola behaving as usual. Yeah, she is, isn't she? Oh, no, she's behaving. Thanks so much. We're going back to the house now. It's either raining or snowing outside. Thanks so much. Good luck tonight. Winehouse, thank you. Steve, thank you. Bye bye, Barry. Cheers. Daniel, thank you. I'm going to miss someone now. Okay. Thank you very much. Bye 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 bye.